This is Justin Pulitzer. This is my weekend video for Sunday, February 27th, 2022. All right, so we got a lot of stuff to discuss. It's been quite the week. You know, there's an old saying that sometimes nothing happens for decades, and then sometimes decades happen in weeks. This sort of felt like one of those. So, first and foremost, sentiment gauge. Bit of a recovery from last week. We were at 35, we're up to 41, which isn't really very high. The bears retreated a bit, but it was a little less than an even split, I guess 60-40. And we're back up to 14%, which is a pretty healthy sideline number. So I would say the majority of the sideline number we now know is obviously people who are bearish. So it kind of just is what it is. So I guess they were part of the short squeeze the last couple days. As far as the CNN gauge goes, this was into extreme fear. I mean, I've seen this thing go to single digits, and I've also seen it get close to 100 before too. But a week ago, it was 39. They got down to 25 and a little bit of a rebound to 31. So people are still kind of fearful, and I suppose for good reason. As far as the economic calendar goes, you know, I have to tell you, I'm losing a lot of faith in these numbers. The revisions are ridiculous. Like, let's take a look at GDP, for example. The prior reading was 6.9. That was revised down to 2.3. What? That's insane. Personal consumption expenditures were 3.3 down to 2. So, I mean, we were in line, but I mean, you know, it's a big revision to the downside. The durable goods orders, however, if this would load, unemployment, by the way, is creeping up slightly. The prior number here was negative 0.9, but it was actually 1.2. And then the consensus was supposed to be 0.5, but it was actually 1.6. So that would be good for GDP, I suppose, but very, very odd, these numbers, and we've seen some really gigantic revisions. The obvious things that we need to pay attention to, obviously, are Ukraine and the Russia situation. We had talked about this. The lead up would be scary and bearish, and then it's the old saying from Baron Rothschild where you buy on the cannons and sell on the trumpets, and as soon as the invasion launched, there was a huge dump, and then it got bought right back up. By the way, whatever happened to COVID? Don't really hear much about that now, except it wasn't so popular in the polling anymore, and now all the restrictions seem to be getting repealed. As far as the Fed goes, they're going to be meeting in mid-March, the 15th and 16th. They didn't have a official February meeting, but we know they snuck one in onto the docket. Not FOMC, but the Fed. So we all know that they're going to raise rates. It's just a matter of how much and what their forecast for future rate hikes are going to be. I'm of the opinion it probably is going to be 1/4 point. If they do go a half, it really better be one and done, or the market's going to start saying, okay, if they're going by 1/2 point, why not start going 1/2 point the next one too? So they've got a big balancing act to handle. Just market dynamics have been pretty bad lately. Good news has had bad reactions. We've seen earnings have pops, and then they seemingly give it all back in the next couple days, and then bad news gets an even worse reaction. I mean, like what happened with Facebook and PayPal and a few of the other ones, they just got smashed and smashed and smashed and smashed. By the way, Facebook 190 held like a little boss, didn't it? And that was the number we were looking for. So we have a couple of things that are coming up on this week. End of month is on Monday, and then Tuesday is the first day of March. So if there is a big pop, let's say on the open on Monday, it might be one to take some profits into, because funds that probably bought the lows might need to lock in some gains just on that day. I mean, maybe they're just going to gun it into the end of the day. I mean, it's always possible, but keep that in mind. Now, I think March is going to be interesting because it's the end of Q1, and we all know how crappy January and February are. So funds need to show their clients that they, made some money. They have a lot of ground to make up. And it wouldn't surprise me to see a strong March. I just don't know if it's going to be weak into the Fed and then they gun it up into the end. That to me seems like maybe the most likely scenario. But it's also possible they kind of run it up into the Fed, book the profits, and then after the Fed, they kind of chill. Maybe we get a bit of a pullback on the actual Fed. So I think it could be a Costanza setup with the Fed. If we're strong into it, maybe we get a sell-off, and then if it's weak into it, maybe that's also a kind of buy on the cannons. If the Fed, guns it and we get a big dump, maybe the news gets bought up just for dynamics of the market and money management. April is a little funny because of tax month. People usually have to sell to pay the tax man, so we could have some weakness in April also. So I think we're going to have, I do think March will wind up having some strength, but April could be a little weak, and if they run it up hard into the end of March, it's probably a good opportunity to put on some shorts. So we may have a little turbulence in the next few weeks, but I think it may resolve a little bit higher but for that performance quota. So that's just, my take on what may transpire. As far as the, let's get this out of the way. This was that bond equivalent yield stuff we talked about, with the S&P maybe having to drop to get close to the bond equivalent yield, which would be around 301, which would be a pretty disgusting move. As far as the VIX goes, there's some interesting things to note. And we were talking about them in the midweek video, almost in real time, right? We were discussing the VX, which is the VIX futures. So we saw a very large pop. Is this on the weekly? I tend to be making this mistake a lot lately. I'm like looking at it, and I think I'm on a daily, but I'm really still on the weekly. So we had this big pop on the, the Ukraine invasion. We still didn't get past, even though price got past the last dump, the VIX didn't. And it sold off right away. And then again, Friday, it sold off. I don't think they completely collapsed it because obviously there's still some weekend risk. But I'm watching this like 27.18 level as my kind of pass, don't pass line. We held it pretty perfectly here on Wednesday. And then we kind of had a little bit of a look below and fail on Friday. But I think that was just some profit taking into the end and people probably wanting to have some protection on in case something goes really crazy over the weekend. But we do have a potential secure high here, which would be a lower high. And if we lose Friday's low, I think we'd at least come back down to the 20 MA and maybe retest 25.20. And then that's really a very key level. And then really 23.01 is the next really big one. So if we get down to there, you might want to add back on some protection. As far as the, I'm not going to go over VX because we don't need it right now. As far as TLT goes, this has been very interesting. The expectations for interest rates have not really changed all that much. And we got the pop I was looking for. It's sort of like Star Wars, right? These are the droids we're looking for. I talked about getting up to between, at the time it was there, but now it's here, the downtrend and the breakdown, and we stalled right there perfectly and dumped. We're holding around down here, but I think we're going to need to see the Fed. Now, is it possible we're forming a little bit of a mini inverted head and shoulders here? I just kind of noticed that on the chart now. I don't know that that's going to be the case, but I don't know that that's not going to be the case. So we're going to keep a close eye on this. This would be like a very interesting setup here. And I think for the bulls, if they can get over the 20 MA and over the downtrend, we could start to see rates fall quite precipitously. Maybe even a move back up to the 50 MA, which had been really the prior support, and we haven't tested it in a while. So keep an eye on this. I think this little setup might be interesting for us in coming weeks and and maybe even just days. Seems like we get like these gigantic moves that used to take weeks and months and sometimes even years in like, a day or two. As far as the dollar goes, this did what we were thinking it would do. It spiked up to the channel high and it pulled back, and you now kind of have, I guess you would call this dark cloud cover. It's another look above and fail. For the bulls to really get going here, they need to get over 96,938 and go. Be very curious to see how this plays out in the next few days. But yeah, that's kind of the key level, and once we come back through there, it's been kind of curtains for the dollar. So, if you're bullish on oil and gold and things that are priced in dollars, although I think oil is a little bit more of a function right now, not so much of the weak dollar, but more so on what's going on geopolitically. Obviously, that's a biggie, and I think that's going to be dominating headlines, maybe for the next couple of days till we start freaking out over the Fed, right? always interesting. Just taking a quick look at crypto. I actually we'll get to crypto in a minute. We'll do it now. Why not? Bitcoin. Got the futures here. I actually bought Ethereum on the dump here. It was right to like a reference low, and it was like a perfect pirouette. We're still below a kind of key level here of 40,085 to 4140. This was a breakdown level, and we're still hovering below there. I think you got a nice little dubstep setup here, and I think if you can get over 39,740, so 39, oh boy, 740.01, I think there's a right or right out long. Now, if we lose the Friday low, you don't want to be long, because this could come back down. This is sort of like the higher low, and that would not be good. Not be good at all. As far as Ethereum goes, I've been joking around that my pronouns now are BTC and ETH. Someone was calling me a crypto bro, which is hilarious on Twitter, and I was just like, I've been kind of my girlfriend and I have been getting a good laugh about that the last couple days. Alrighty, so we have multiple days of consolidation down here. This was kind of me buying on the cannon, so to speak. I think if we get over, I'm going to just set an alert over the kind of the high of the range here. 2762. 2762.01. I think you could buy the Ether. I'll say add to ETH. So, yeah, if we get over these multi-day high, I think it's go time. If we start losing Friday's low, maybe not so much. All right. Do I get a little bit of props for my call on gold that it was gonna pop and that would be the sell? And look, we talked about a $21.30 run from, remember we talked about the W in the rally, and here we had the W in the rally, and sure enough, we got right up to the target and dumped pretty hard. We got past the chat. This was my original target we had talking about booking some profits into there, and then finishing up over here. But the interesting part was we opened at basically the high of day. The open was 182.59, and it went a penny higher and then just fell apart. So if you had your sell order in at 182.27, I mean, you caught almost the high of day here. Pretty nice, technical analysis, following JP. These are some of the ways to do it. But right now it's got to hold the 10 MA. If you start losing 175.27, this is going to get ugly fast. Probably back down to 172.61, and maybe even much lower. So just keep that in mind. If you start percolating up, I mean, if you want to use Friday's range, if we're up above that 176.79, just keep trailing up the stop. Excuse me. I didn't sleep very well this week, and I just had a lot of stuff going on, so I'm sorry I'm yawning. It's also from lack of oxygen, they say sometimes. So if we get up to 178.85, that's probably a good area to book into as well. Okay. /CL. All right, so oil is also a little bit of a sell on the cannons. I think there was also just too easy not to sell $100, right? I mean, oil is up a lot, and the news was basically because of Russia, and I think people just took the opportunity to sell the news. Pretty plain and simple. Oil has got to get really back up over 95.82 and really into 95 plus to get another leg up to the 109.08 and 123.71. But if it starts losing Friday's low and starts losing, these lows, we could be coming back down to 85.41 and maybe even back to the 50 MA pretty quickly. So just be careful if you're long a lot of these stocks. I'd mentioned that with the XLE. To book profits, we were up into a very key reference area, and this has been very weak. Friday it firmed up a little bit, but the money flow is definitely coming out. And let me just show you again on CL as well. Very interesting to note money flow. Look, we made a new high, and money flow is not confirming here. Okay, so just keep that in mind. When you make new highs with money flow not confirming, and this is just the money flow index if you want to add it to your studies, it could be problematic. XLE still kind of looks good. I know Exxon was strong today too. Nice little bounce off the backside of the old trend line. If you're still long Exxon and you haven't booked any, I think it's probably a good idea to do so. And then 76.26 low of day is a very easy stop. I just want to note that money flow has not been confirming these moves for a while. I'm going to put RORO short here if it breaks the low. Be help if I could actually type. We're getting close. I mean, we used up a lot of the time, so if this can dip below here, it may recharge. I'd love to see a backside of the old up channel from a new high. Not of all-time high, of course, but of this leg, and line up with the 50 MA, and that to me would be a spectacular opportunity for at least for a day trade, and maybe even a swing trade back up. So 50 MA channel confluence. If it gets down to like 72s, that would make some sense to me. I was looking at TAN. All this talk about renewables and so on and so forth. We held a pretty key level. I was actually hoping this would get down to 43s, the channel low, but we seem to be rallying, and the last breakdown here was 73.56. So if the market stays firm, I would think there'd be some sellers at the 50 MA. It's just too obvious, and we could get back up there. So if you want to be long TAN versus, like, let's say a 20 MA stop, 63.58 plus has to hold. If it loses that, you could always stop out. But that might be interesting. I was noticing something interesting as well, more interesting things. I'm going to pull up SPY, but we're going to talk about the futures for a second. What do you see? Let me make this a little smaller. This is my grid. I call this the grid. What do you see in the futures here? You notice a pattern here? Inverted head and shoulders. Yeah, remember here when I was making the midweek video and I said I expected there to be a new low, and I said it in real time, maybe we get an inverted head and shoulders bottom. We did it, but I didn't expect it to form this gigantic one. And just keeping a few levels in mind here that could be problematic. The downtrend, if we open up strong on, let's say, Monday up here around 43.95, that could be some selling. I think you could raise the stop to 43.45 half here. If that were to fail, we'd obviously see the VWAP. This was, the last couple of days we saw a lot of short covering. 43.29s here, and then this is the ultimate kind of, it depends on how you use the neckline. I would say 43.45 half is probably okay, but 42.90 is a big level as well, and that's those are levels I'm watching. On the NQs, 14,108.25 is very key here for me. That was this spike high on the kind of on the open before the sell-off and then subsequent rally. 41,031 and then 13,983.25. I think the key really here for me is going to be if it can hold 14,000. That would be a pretty big pullback. It's surreal watching like 100 and 200 point pullbacks that like are nothing. I mean, that are like sort of like 10 and 20 point pullbacks. It's just insane. We're kind of off the deep end here. You know, I started trading when I was 18. I'm 43 now. You could do the math. It's like 25 years. And I was trading, you know, with my grandfather before I was 18. So, I mean, you're talking about, you know, really a long time in the market for me. I remember my 18th birthday, I ran over to the broker, I opened up an account, and I bought some AOL. That was my first kind of serious trade, which wound up being pretty good. And when the dot-com bubble blew up, I actually sold AOL at 95. It was I caught the high on it. I was trying to wait for 100, but I was like, you know what? Let's just sell it here. I was watching some of the price action even back then, and I was just like, this is looking kind of weak. And sold. So that worked out. That was nice. Little history lesson there. But these are the levels I'm watching, and it is possible here. We have a big inverted head and shoulders, and we could see, you know, a pretty big rally. There might be a little bit of a check back first, but you know, we could see more. So let's quantify that a little bit. The expected move in SPY this week is pretty big. It's $12.84. I was saying, by the way, when I remember being, you know, a young whippersnapper back then, and this was, you know, in the dot-com bubble, and oh my God, I mean, to move $100 in NASDAQ, I mean, if the NASDAQ was down $100, I mean, it was like the world ended. You know, I mean, it's a different, you know, I mean, I remember 5,000 stood for so many years, and now we're in like 14,000s. I mean, it's incredible. So we had a few things happen here. So let's go back in time for a minute. These here were the October lows. We checked back and had a look below and fail in January, and we rallied up, pulled back, rallied. This was a really valiant attempt here for the bulls. I actually wound up shorting it up here, oddly enough. But we got a very, very big pullback, a lower high, and now we have another massive look below and fail. And now we're back up above some levels. We're back into some breakdown levels, and if you look at a fib retracement from the 479.98 peak to the 410.64 low, we're right back to the 38.2 retracement. Now, what do I always say? 38.2s, when they fail, are sign of a very weak market. Here, when we bounced initially, this was, I think, also, let me readjust this for a sec. I want to just show you. I think it's important to show you this. See, we stalled here originally at the 38.2, and then went on to the 50% fib, and then the 61.8. So we may have some failure here initially, because we did the last time. We could just chop around here a little bit. This was also a reference low on 214, the Valentine's Day low. So this zone to me is very key. We kind of got to hold 435.34. Below there, you may want to use as a stop. But if we do wind up continuing, the next stop probably would be the downtrend in 20 MA confluence up at 443.18, and then the 200 MA comes into play around 445. Around 444.99. And then the halfback is 445.31. I think that area will be some pretty stiff resistance, give or take, you know, a few points. Maybe we get to the backside of the old up channel, and that would be, you know, up here around 447. So if we get some kind of other big push up there, I'd be looking to book some profits into there. Now, if we are weak a little on, let's say, Monday, and we have a lower high, you could use whatever that lower high is as a stop. or as an initiation of a short. Like if we have an inside day, like a doji day, I call it the dubstep, but it's really an inside harami. If you want to get really technical, Japanese, Steve Nissan, Japanese candlestick charting patterns style. Oddly enough, I've never actually read the book. I've seen it and I've thumbed through it, but I never actually had the patience to read through that book. And it's super expensive, right? It's kind of ridiculous. So that's kind of what I'm looking for. And I think if we have that up open, I'd be looking to book a little bit of profits into that, okay? IWM. So IWM has a perfect kind of setup here for a W bottom. It didn't have a look below, did it? Maybe mini 187.92. All right, I mean, to me this is equal lows, but I guess it's a mini look below and fail. So we're coming back up to the higher end of the range. I would use the 20 MA stop if you're long, or to initiate a short below 274. If we do, we could come up to the 50 MA up here, back up to the high end of the range. I was also kind of thinking that's also roughly exactly 208.52. It's identical to the kind of breakdown area. I was also thinking in SPY, one more, sorry to jump around, but if we do have the full look below and fail, would it be entirely unreasonable to think we do come back up to the high end of range? Because that's usually what happens, right? Excuse me. If you have a look below and fail, you come back up to the range high. So this here was kind of the range high up around 456s. I think the 50 MA would qualify for that. So could we, really do have a pretty big beast up there? Don't discount that. It's very, very possible. In IWM, by the way, that's $7.46, the expected move. Let's take a look at the DIA, which, by the way, pays a monthly dividend. TLT does as well, by the way. Diamonds are right back up to the a breakdown level, 38.2, probably a good area to book some profitos into. The 20 MA has been a very key level, and I would imagine if we pop up into there would be a good, because it's the backside of the old downtrend, probably a good area to maybe book some profits into. All right, just saying. So 347.19, I'd have those orders set and ready to go. Get rid of this for now. I had been trailing down, stops and putting, levels for moves above. So good area to book some into, and then if we pop up here, I'd be booking still more. I think to get through 351s is going to be really, really difficult because the 50 MA will likely be there. You have the 61.8 at an old kind of breakdown level. You have the 200 MA. We're going to be talking death crosses in the next couple days, by the way, because 50 MAs are going to be crossing through 200 MAs. 8.68 is the expected move in the DIA. XLF. This really needs the Fed to be aggressive. And I have a feeling this is going to be kind of one of those, it could be a sell the news if it's strong into the Fed. If it's weak into the Fed, maybe I think it's going to be one of those Costanza type plays. So we're kind of peeking over the downtrend line here. We're a little bit below the halfback, which is interesting to me. But we came right back down to the reference lows, and maybe we're just in this big trading range, like I talked about being in for the year. We could just be in a very, very large trading range. That was sort of my hypothesis coming into the year, and it seems to be playing out. So where would my stop be here? Obviously the 38.2, 38.68, I think. I don't think I would wait for the 200 MA. I'd use that because this was this low here from 222, so that makes some sense to me. And there's a huge moving average confluence up here, 100 MA, 50 MA, 20 MA, up in 39s. I'd be looking to book some profits up there in the XLF. JPM. This really stunk up the joint after their earnings. But we have a perfect retest of the low, and this is below the 38.2, which shows you it's a little weaker than the broad market. So maybe the 50 MA, that's been the resistance. If you're long, I'd be putting orders up there. It has overshot it a little bit, so you could leave it up maybe at the 50% fib up here. at 156.29, but I would definitely have some right on the nose at 155.12, because what if it hits it and then just pulls right back? I'd be a little careful. So that's sort of my thinking on a JPM. But what everyone wants to know is the Qs. $12.35 is the expected move. So the Qs are a little weaker than the rest of the market. We're not back up to the 38.2 yet. And that was a kind of coincides with the reference neckline, if the horizontal one. We're in a kind of slanted neckline in the Qs, and I've told you that's a harder short to pull off. When they collapse, they are the ugliest thing you'll ever see. I've seen it happen. But we did get over a 20% correction, the proverbial bear market, and now we're rallying. So I think the 20 MA area might be some resistance up here at 352.81, but if we do get some bulldog type of move, we could get up to 360. Now that would be a good area to be a short for me, because that's the primary downtrend line. You might get a little more to half back, but into this zone here, to me would be the area to do it, and maybe we get the kind of double tap right shoulder. I'm sort of thinking, because we had double tap heads, maybe we get a double tap right shoulder situation, and we're about to get the death cross. I'm shocked. I'm surprised we haven't heard about Hindenburg omens yet. That's going to be coming. Sort of reminds me of 300, right? They sent their magicians. They sent their magicians. That's like my favorite one. I gotta rewatch 300, man. That's like the only Gerard Butler movie I like, and man, that was a good one. So Friday's low is a good hard stop for me, because me and my thinking with 338.19. That was key support. We retested it. We kind of retested it here. We lost it. We're back up above it. Friday's low is very, very close at 337.39. So dealer's choice. I personally have the alert here set at 337.38. So if we lose that, I will be bailing on a lot of my NASDAQ plays. But if we stay above there or just chop a little, it's still all right. So very, very simple setup there. Let's take a look at XBI. I heard some of the geniuses on TV talking about wanting to buy XBI today. I really do not like when they're on my side, but we're near channel lows. We're back to 86s. I still like selling out of the money puttage in XBI down here. I think it's pulled back a lot. If you want to sell 75 or below strike puts, I like it a lot. Gilead, very cheap stock down here. It's holding in pretty well. I think it's still a 5% yielder down here. I had sold some puttage. Hopefully it won't make me look too dumb. But I think it's okay down here to nibble a little Gilead. Could it get down to 56s? Sure. But it's down a lot, and it's into a pretty big reference area. MRNA. I checked. This is only a 9 times multiple now. Okay. I'm impressed. Came down quite a bit. I mean, I remember the day the fast money guys were all saying they were adding up here, and I was just like, this is it. This is the top. And sure enough, bing bang boom, right down to the downside. Those guys are kind of always looking to like puke the high, puke the lows and buy the highs. It's really pathetic, I think. I'm so glad. I had talked with them about doing the show a bunch of years back in like 2014, 2015, and I'm just so glad I never got mixed up with them. I know it probably would have been good career-wise, but reputation matters, and I don't think I want to have my good name sullied with those people over there. Anyway, nice little setup, dubstep actually, with a 20 MA resistance. So if it gets over Thursday and Friday's high, I'll be long, probably for a move back up to the 50 MA. And we'll see. If you lose Friday's low, I'd be careful. But they reported earnings. It was all right. You got a little bit of inside movement here. I think selling sub 100 puts makes some sense to me. The rally really started from 102. I'm going to take a quick look. MRNA. Moderna. Alrighty. So there isn't any juice in the March. In April, maybe? It's a little long. I mean, April seems like a country mile away at this point. April. I don't really want to go out to May. It's just too long. But that has juice. Like, if you don't mind owning this at 95, 350 is pretty good. Pretty good. I'll probably wind up just doing a call spread for a move back up to the 50 MA. I'd buy, like, you know, or maybe even just buy shares. Buy like 155, 160 calls, and then sell like 190s. Makes sense to me. Not weekly though. I do the monthly. I know the temptation, but you don't want that data decay. So Pfizer, like a boss off the channel low. I was really hoping for it to overshoot like it did on the upside, to the downside, but alas, the channel low held. So if you want to buy the dip with a 200 MA stop, that makes some sense to me. Maybe it gets back up to $50, okay? But I think if you missed it here, you might want to wait for a little bit of a dip. If you want to sell some puttage, Pfizer is not that expensive. It's only 12 times earnings. It got 3.5% yield. I don't hate that at all. I'm going to see what 39 puts are like in Pfizer in April. Are there any juice? There is no juice. Is there any juice in May? Not really. So maybe just nibble some shares, or if you want to sell, 43 is not too bad. That was the breakout. Let me see. Is there juice in 43s? 43, not in March. In April? I don't really want to do 45. Yeah, so I guess if you don't mind a little bit, I guess you could sell some of the puts there, maybe into a dip. But you might want to just do shares. ARK. So I told you so. I hate to be an I told you so, even though you all secretly know I love to be an I told you so. Only half kidding there, by the way. But we did get the 58.09 to 60.73 level, and now we're bouncing. So 20 MA has been some resistance. I'd be trimming there if you bought the dip. And 64.35, which was the old low, that's why I didn't adjust this yet, is a great stop. Okay. Let me now move it down. Could this get all the way back up to the 38.2? It's very possible. But I think the 50 MA will likely be wherever that is. Maybe it overshoots a bit, but I like booking some at the 20, and I like booking all of it pretty much at the 50, because that's the backside of the old channel. If we even get there. Tesla, which is a Cathie Wood fan fave. Cathie Wood fan fave. So, a few things to note. My downside target was roughly 719.95. We overshot slightly down to 700 on the nose, which was a big breakout level. It's also the 78.6 of the range. My, oh my, have the mighty fallen. And now they're investigating Elon Musk and his brother for the tweets and the sales. I mean, we have a potential secure low here. I think if you're long, Friday's low is a good stop, 782.40. We know 900 was a very big level, and I suspect that that may be some resistance again if we get up to there. The 200 MA had been support, so I would be selling some there too, 832.71, and then I would be selling more at the 20 MA. Just have these orders ready to go, bing, bang, boom, 880. I'd have some at 900, and then if somehow this gets back up to the 50 MA, I think you have a right or right out short, particularly if it just comes up in a straight line. So I'd be selling if you're long shares, 900 or above calls. If you can get off some that are close to 960s or so, makes some sense to me. It's interesting that the 61.8 here, it held the 50% here. Then it held the 61.8, then it held the 78.6. So if this breaks down again, I mean, I guess it's going to 546. If you want to do some type of put ratio, 1/2, that you could get on for free, let's see if we can cozy one of those up. Tesla. So let's say we went out to, April's a long time, but why not? What did I say the low was? Chart, please. So like 546. So we'll do 545. So that would be, oh, there is no 5, so we'll do 540. There is no Dana, only Zool. So we'll add on, that's the 600 minus 540. I'm just curious if you custom 1 by 2, 47-cent credit. I like that. I'm always looking to, nope. I'm just stress testing this here to see if we can get a higher strike, and I always want to bring in more bucks. Nope, that's it. So 600, 540. If you could, I might even just put this in right now for a 50-cent credit, although this isn't the right account for it. This is a IRA I use for these videos because don't want to clutter it up with all my orders and alerts. But that makes some sense. If you want to play it like super cute, you could buy 540, and you know this might be a little less crazy. I mean, you have less chance of making money on it, but you know, also you won't be crapping your pants when it gets down to 540 because you're short a 480 put, and you could fill that for 5 cents. I might do both. I'd actually fill both of these. I like them both, actually. I should probably do those. So, yep, I think I'm going to be doing those. So those are trades I like to do if you want to do with options. All right, let's talk about Apple, because Apple was really, really close to causing some major problems. By the way, Facebook is cutting off Russian media from advertising, and the Ukrainian government has asked Apple to deplatform Russia. Listen, the Great Reset is upon us, my friends. We live in very interesting times. I'm just going to leave it like that. I was talking on real time about a 100 MA break leading to a 200 MA test, and look what exactly happened. And this was also the 2 times range. So if we fail again, the 2.6 is down by 142. So you're probably asking me, JP, what now? You know, I had the short at the 100. I covered it at the 200. I got long at the 200. Well, what am I doing? So here's what I think you should do, and what I would be doing if I was in your shoes, and what I may just be doing, period. So all right. So let me get a little serious. I love to hear myself speak sometimes, I think. So, all right. So a couple of things to note. One, we're over the 38.2, which is good. So if you want to use that as a stop, I'm fine with that. 163.82. More importantly, we know the 100 MA was very key here. You could use that as your stop too, 162.91. I'd be booking some here at this gap fill. 167.30. Get those orders ready, people. This was the big neckline breakdown. So you got the 2 times range. This is the check back to the breakdown. Very simple. Done and done. If you want to, feel like you got great trade location and you want to try and hold, maybe you think you're going to get the channel high. Maybe you think you're going to get the 61.8 here up over, in the 171.12. All right, if you want to keep a flyer into that, that's fine. But 167.40, what is this? 46. You remember that movie Hitch where he's like, I know I got that covered with the dancing, and I make the pizza, and he's like, no, this is your space. This is the space. This is the area to start selling into. IMHO, okay? That's a great movie. Very, very funny. Google, perfect little pirouette off the 100% retracement. And now it's back up to the 61.8 where this was prior support. It now is a little bit of resistance. Here we're now back into the, let's get rid of this yellow channel because it's no longer required. So, I think we could get up to the 50 MA. That had been old resistance. That may be some resistance now. I'm waiting. I have some long that I'm going to just kind of hold, but I've been reluctant to do too much in Google just because it's such an expensive stock and it eats up margin. Yeah, I have a decent size account. I'm a big boy. I can handle it, but it would hamper me so much here because it's, I mean, you're talking about out in the summer. So I think as we get closer to the split, I'll get a lot more active in the GOOG. But I think you could use the 10 MA or low of day to 26.3503 as a stop now. And I'd be looking to maybe slam it out, some at the 50 MA. And if we get up to the 100 MA, probably, you know, all of it, because that had been key support. And then that'll be resistance. And then we could, you know, play a little game, you know, like that Saw movie. The market feels like Saw lately, right? First, by the way, if you've never seen Saw or if you're a fan of the franchise, the only one you ever need to see is the first one, because they're all terrible after that. Just saying. So the 38.2, good area maybe to trim, and then the 50% is a great area because this is really where the stock got breaking down from, and this was also the prior gap fill. So yeah, I think that area makes some sense to book some gains into. Maybe it overshoots a little to 27.86, and if we're lucky and we get a really, really strong market, and maybe we should because Google, you know, is Google. 28, 27.70. I'm going to set an alert there. I wasn't really planning on selling any Google ahead of the split, but if we do get there, I'm going to say sell some. If we get back to 3,000, I'll be out of it all. Just telling you right now. 3,000 is my sell point if we get all the way up there. I've sold it several times there, and I'll do it again. Not just talking tough. I will. Those orders are already out, by the way. They've been out for a very long time. So Amazon did get back down to the range lows, and now it's rallying up again. I'm curious to know who bought it down here, if you did or didn't. They had good earnings, but they've had a problem, and that problem has been the 50-day moving average. And I suspect it will be again, because traders do what works until it doesn't. And if you are, I'm just telling you, set your order there. This hit so fast. Remember that day trade we talked about over the 2-day high? I mean, if you weren't like on Johnny on the spot, you probably missed this. So set those alerts. So 31.6586. That would be the thing to me if you want to stop a little below the 20 MA, or maybe even below 34.98. That makes some sense to me, but I think you could hold it if the market's okay. 50 MA could be the spot. I had a request to do Costco. So this stock was like a Teflon stock for a while. It didn't quite get the 200 MA, which was kind of my buy the dip zone, which kind of pisses me off. But we are coming into earnings. Oh boy. They'll probably be good. But we know the 50 MA was where this fell apart from. We know the 50 MA has been resistance. We're right up to the downtrend. So I will be a second mouse because I don't love that we're bouncing into the number. It may be good. We may have a big rally. I'd be happy to be the second mouse on this. Given the fact that we know lately when stocks report and they're bad, they get destroyed. And we know when they rally, they pop and flop. I'd be laying out some orders at the 50-day, at least some. My humblest of opinions. Home Depot. Oh man, did this thing get poleaxed this week. It filled the gap. It has a secure low here. If you want to trail up stops to Friday's low, that makes sense. But we could be coming into some resistance at 324.16. And I don't know if it's going to fill the gap right away, but we'll see. But I mean, the gap fill, I was really kind of hoping it was going to really overshoot down to 280. So if you want to sell some 280 puts, I'd have to check to see if there's any juice. That makes some sense to me. Let's do a quick check. All right. April's a little far, but if you really want to own Home Depot, don't mind selling those. Are there any juice in March? A little bit. A little bit there. You know, if you want to be a baller, you could always buy the March and sell the Aprils, and you'd be, you know, covered for a while in case we roll over fast. So, yeah, I don't mind selling some 280 puts or below in Home Depot. I was looking at a setup, actually. at, you know, if you think it's going to come down, you could do a 1x2, like 265, 245. You know, that would be the all-time low down here. It's possible, you know, later on we roll out. So if you want to do this like 48 days to expiration or so, the 265, 245 works. You know, you'll make money if it gets down to 280. That's probably where I'd book it. But yeah, could fill that for a credit. I did the work up before the video. Netflix. All right, so Hackman bought it. Not Gene Hackman, by the way. Bill Ackman. Just not a big fan of his. I don't know. I don't really have anything too personal against him. I don't really like his style, and he has a very, very spotty record. Friday's low, if you want to be long against 375.58, that makes sense to me. I like owning this down here around 385. So, yeah, bit of a higher low. The money flow higher low, so we could see a little bit of a bounce. Netflix, don't hate it here. Let me put an alert over Friday's high, 391.29. I almost bought this actually Friday. I don't know why I didn't. What was I doing? I forgot what I was doing. I often get distracted with other trades I'm in. You can't do them all, you know. I mean, I have a decent size, you know, swing a decent line, but, you know, all these big stocks, I just wish that, I mean, Netflix isn't that big a deal, but like Google and Amazon, they're margin killers, man. They are just freaking margin killers. Netflix is all right. I don't mind them. I like them when they're in the hundreds because they're, you know, expensive enough that they still have juice in the options, but they're not like complete killers of the account. You know, like if you're in a bunch of Google calls or, you know, I mean, how much more can you do? Or shares even. I mean, frick, crying out loud. ROKU. This was one ugly mofo, to quote Arnold Schwarzenegger from Predator. It's going to be a sale at the gap fill. It rallied back up. It filled it almost right away. I'm curious to know. I know a gentleman had been in this, and he had been short a put spread, and I know he got frickin' creamed on this move. And they were the same week expiration. That's why I usually don't like doing those, but for earnings, I do like doing those. So this was just sort of bad luck, and it's filling in the gap. It just overly shorted, and I think people use the opportunity for the drop to book gains. I mean, it makes sense to me. Disney, which is a much beloved stock and much beloved company and a reopened play and all that jazz. I think I recall, I'd have to go back into my video, but I think I said it would be a buy at the 61.8 at 140. Go figure how that worked out. Look, folks, 25 years, this is what I do. So pretty hard bounce. Friday's low is a great stop, 147.22. It's the 20 MA, it's the stop, okay? Now, where would I be out of the trade completely? Are we forming an inverted head and shoulders here? That would be very ugly, but very possible. Let's go back in the Wayback Machine. The 100 MA and the 50 MA had been key levels. So I like booking some here. And if we get up to the 100 MA, book the rest. Very simple. Which is currently 156.23. And right here, around 150, I'd be booking some. Nice little 10 bagger in a day. And Disney. Pfft. All right, Facebook. So it overshot a little bit more than it, I guess, should have. But I did say it probably would, because 195 was the old top, and then like 190 was the 78.6. This is a disgusting pullback in Facebook, by the way. So you're probably asking, what now? So here is your what now. Friday's low, 203.18 is a good stop. We're right on the 10 MA. I don't mind trimming a little here, but I think we could get up to the 20 MA. That's where this kind of crashed from. I guess really the 50 MA. But we'll get there at some point, I'm sure. And I do think eventually Facebook will fill in that gap. But we're coming up here. 20 MA would be my next big target. So I'm cool with selling out of the money puts in this if you're okay with 190, that's fine. I like 190 or below puts down to 165 if you want to go out like a little bit longer. That's cool. All right, I got a lot of questions about booking, and people seem to be pretty bearish on it. So the reference all-time high, old all-time high from here in 2018 was 2,228.99. So if you want to use that now as a stop on longs, I like it. If you want to be short, try it below there. But let me show you. This was a look above and fail. Those usually come down to the lower end of the range, which we did. We gapped down and they bought it. 200 MA, probably a good area to maybe book some profits into, but could this get up to the 100 MA and the 50 MA, maybe even fill in the gap? Yeah, I mean, these are reopened plays. So, yeah, if you want to be long, Friday's low is a great stop. 2250.10. Anything above there, I think it's still all right. Below there, maybe not so much. Expedia. All right, so this was up a lot. It got smoked on the number. Then they rallied it and dumped it, and now it's kind of up again. I would use it held the 50, which is good to know. We now know that that's a key level to watch. I'd use the 20 MA as a hard stop now. I would not give up those gains, 195.31. And I would be booking some profits into the gap fill right now, right here, right now, and up to set those orders 203.05. So just to 203, right up to the 10 MA. That was the old support. It will likely be some resistance now. And if we're looking on the time frame, I'm just curious to see where this stopped, at the 61.8. No surprise there. So on the 61.8 bounce for here is right up at the 10 MA. So 203s to 204s. Expedia, bye-bye. ABNB, Airbnb. All right, so remember we talked about this in the midweek video? Right before the dump. I said that dump day is day 5. Remember? 1, 2, 3, 4, 5. The big girl will back me up on this because I was talking to her about this. For those of you who are new to the broadcast, Big Girl's an old friend of mine who I used to go to TD Ameritrade shows with, and we'd hang out, and now we just text all day. So, Friday's low is a good stop now, 152.91. I still like selling like 140, 130 put spreads, or if you want to do 150, 140. They had good numbers, but they got smoked. But with COVID retreating, Airbnb could get going. This is going to depend on the market because obviously Airbnb is a high multiple. But I think this is going to be choppy for a while. Maybe a strangle candidate, but or a iron condor candidate. But we're still near the lower end of the range. I don't mind nibbling a little bit down here. All right, so Square. This was interesting because this is one. Remember up here, I said be careful with Square. It's going to play catch up to PayPal, and this was before it really fell apart. And sure enough, it now really fell apart. So a couple of things to note. My downside target for this was $83, and we got it. I mean, it was really 87 quarter to 83. Originally, it was 101s, and then when it kind of broke, this was the spot. This is, again, the 78.6. Very interesting levels because some of these big dumpers have been to the 78.6. So we will game that out, and when we see these big dumpers going forward. Now, I almost bought this on Friday, but a couple of things held me back. One is that we've seen a lot of these one-day wonders or two-day wonders. They give the earnings gains back right away. I think you could just be long this with a stop below the 20 MA. That was the resistance, very easy. But we're right up onto the downtrend line. So if we gap up over it, I think it could be a pro gap and go, and people won't even realize that. Probably trim a little at the 50 MA, but this could really come up to 160. Back to even the 50% fib. I think from the 78.6, the 61.8 will be a sale initially, 130. So if you've been in it, I would trim there for sure because it's the 61.8 and the 50%. And the 50-day moving average. And then we'll see. My guess is this will rally for a few days, come back, check back to the backside of the old downtrend line, and you could probably buy it. It'll line up with the 20 MA at the time, and then it'll go. So I think a little higher, then lower, and then higher again is what I think Square is going to do. PayPal. All right, so we're freaking there, man. We're down to the 78.6. The only problem for me with PayPal is it hasn't reported again, and we've now on 3 crappy earnings, down, down, and down. Down here, I don't mind owning it. If you want to sell sub $100 puts, that's all right. But be mindful, the 20 MA has been resistance, and it will probably be again, because traders do what works until it doesn't, and this chart is super duper ugly. Remember, I tried it long here, and then when it broke 179, I got out. It rallied up into the number, and I was very tempted to buy it again. And I said, JP, that's just your vanity speaking. And sure enough, I knew what was coming, and whammo. And we talked about it. I said, I think this is going to go lower on earnings. But down here, I don't mind nibbling a little. I don't. I may do that on Square, and on if Square holds, I'm going to nibble a little Square, and I may nibble a little PayPal. We'll see. I know these things have been pretty disgusting, but they do have some very large I wouldn't say barriers to entry, although they do have that, but I think they have some pretty good, I mean, they're good companies, and they're down a ton, so might be interested in nibbling, but I do think Square is better than PayPal, and I never think Square is better than PayPal. Affirm may finally have bottomed. I've been waiting very, very patiently. I actually was in it and out of it and in and out of it. I really would feel more comfortable if it got back up over 46.50, but I might try a small nibble down here. Just a little nibble. I do eventually think the stock could get back up to 100, 90 to 100. I guess 83s was resistance. This is very bad what's happening right now, because I'm seeing the system having gone... Oh, no, it just came back up. Oh, God, I just saw that delay of service. I was like, we're going to have to end the video here. But Affirm, I don't mind doing a little nibble here. But, man, they're going to have a really good... I don't think this stock is going to take off until they have good earnings. So just be careful. They tend to be a little bit of a conservative guider, so it wouldn't surprise me if they do wind up firming up at some point. General Dynamics. These are obviously all very hot because of Ukraine. We're back up to the old highs. I'd probably be... it'll probably make a new high. I'm willing to stipulate that. But I do think it's probably one to sell a little into. Okay? The channel up here is, if it does it on Monday, 336s. We'll do all of them. Why not? Northrop Grumman. Knock. Looks pretty good, but it's up to reference highs. Do we have a cup and a big handle here? It's possible. So this one actually looks pretty good, but I'd be cautious if it's below 408.03. I'd love to see this do the dubstep and then long over the 2-day high and a stop below the higher low. So, this candle's too big to use for the whole thing. But if you want to use VWAP, 406.90 would make some sense to me if it can... kind of the VWAP was up high. So I'd love to see it just do whatever it's going to do, come back up, and then whatever that higher low is a good stop. Raytheon, RTX. I remember when they were RTN back in the day. $100 is a very big level. I would be booking into that. Okay, very simple. The 50 MA was the buy the dip. So I'll say buy the dip at the 50 MA until that doesn't work. Currently, we already just got it, so I don't know if we're going to get right back there. But the channel high in the 100 area, it's going to be, I think, a sale. Currently, it's 89.99, the 50 MA. All right, I got some requests. Let's just bang through these. QS, QuantumScape. Got the dubstep here. Friday's low would be a good stop, 14.51. So over 15.5, I guess. So maybe I'll try this one. It looks like a crappy company and a crappy stock, but it's a setup. and you're close enough to the lows that you're not going to get killed. So sure, why not? DoorDash. So they got smacked around on earnings. I actually originally thought this had the opportunity to be up, and it did, but they sold it. Now you got a little dubstep here with the 20 MA. So long over. Actually, I'm going to set this one up too for right or right out play. I just don't like setting too many alerts because when I do, I get overwhelmed and I can't do them all. So I wind up like missing a bunch because I'm like checking out like the alerts. So row long over those 2-day highs, and I would use the low over below 94.28 as a stop if it doesn't work. ENVX. Do I have this right? ENVX, yeah. They still have earnings coming up, so I'd feel much more comfortable if we were through the earnings, but 1684 has been the kind of range high, so if you bought it in 12s, I'd be booking some profits there, and then just see what happens with the earnings. If it breaks below the reference range low, it's going to be a short, and then if it gets up and holds up over, let's just say 17, it could run. Maybe even back to 23, so it's got to clear 17, so I'd probably wait for the number. Snowflake. I think the big girl actually requested this one. Speaking of the big girl. One day, I'm sure she'll, I don't know, she's a little shy. She probably won't out herself. She used to make up a fake name when she'd call into some shows. I remember those days. Anyway, 50 MA has been resistance. It maybe again, the 100 MA has been really the big key resistance. That was support. Yeah, I mean, maybe Snowflake gets back up there. But they have earnings coming up. If you're long, I would set some, this could be pop and flop. So I probably would have some sell orders at the 50 MA and some at the 100 MA. It seems like it'll probably have a pop, but I don't know. It's a new kind of company. They got creamed the last time. So if it rallies into the number, I wouldn't be long. But if it's down, maybe. I'd rather be a second mouse on all of these, to be honest. Cummins, 186.73 was the breakout, and it's not quite there yet. Did they report? They did. They got smacked, right? No, they were kind of up. Yeah, this filled the gap. I don't know. I don't know, man. I'd like it down closer to 180 if you want to own it. The 200 MA has been the resistance, so maybe it's a strangle play. Sell like 180 puts and like 230 calls if there's juice. I'd have to check, but we're kind of low on time, so I don't want to do that at the moment. Boeing, oh my God, there's this Netflix show about them. So devastatingly bearish. It just to me looks like it's caught between like these like lower 187s, 188s, and the 200 MA up around 220. Eventually this will break. We're going to have to see how it goes, but for now it's just a range trade. Buy the lower end and sell the higher end. Very, very simple. Infosys, not one I've talked about in years. I can't believe this got down to 6. I wish I saw this. I would have definitely been a buyer down there. But we're now transitioning from bullish to bearish. It seems to me the 100 MA has been the resistance. If you're long 50, I would use the 200 MA as a stop now, 22.49. If you want to give it a little more room, 21.89. That would be the stop. But it looks to me like it's transitioned from bullish to bearish. I mean, if this were to get all the way back up to the backside of the old uptrend line, I'd probably short it. But it's looking to me a little bearish. Trend is broken. Big C, I forgot to do this for, I think, the gentleman who does our timestamps, if memory serves me correctly. So this has been a very, very nasty play. It's mid-channel here, so I don't know if I have an edge on it. I know the 200 MA and the channel high are going to be the resistance, and I know the channel low would likely be support. I wish it was closer to 1 to kind of to game it out, but honestly, I'd wait until after the earnings. If it's good, then it'll probably get up to the channel. I mean, it'll be choppy, but it'll probably get up to the channel high, and I think you could chase it. But if it's down, maybe it gets down to the channel low, and you could buy it there on some kind of massive washout. We'll see. So I'd be the second mouse on that if you want to. I'd probably trim some if you're already long at the 50 MA if we get up there. But if it can get over the 50 MA here and accelerate, I think it gets the channel high. So I think the buy, if you're not long, is over the 50 MA for the move to the 200. Very simple. Have a great rest of your weekend. I will see you for the midweek video next week. It will be on Tuesday. Cheers.